afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. It is Fed Day. We have a decision, and markets accelerating to the upside right now. We have the S&Ps up 87 points. That's 1.54% in the green. You see the acceleration right out of the gate. We get the announcement at 2 p.m. Eastern Time. They keep the rates where they are, but they are looking for more inflation. They're looking for slower growth than was anticipated prior. And they're looking for higher unemployment. They're looking for about 2 cuts through this year, and they're actually going to slow the process of the balance sheet. And we'll get into all that, but markets rejoicing, and we got an acceleration. S&P's up 1.6%. NASDAQ 100, how about 2% on the dot? 20,098. We're up by 396, make it 400 points in the green. In the NASDAQ 100, Dow right now up 1.3%, or 537 points in the green. 42,477 in the Russell, up by 2% as well. Bitcoin trades with growth stocks on many occasions right now, up $3,700. You see the acceleration, even since that 2 p.m. Fed, right? We just jumped from 84,000 to 86,000 in Bitcoin. Crude, some volatility today. We almost make it down to a 65 handle. We're trading at 66.09. We make it to 66.09. We're trading at 67.02. And yeah, let's get to the all-important yields and currencies. You talk about it, man. Higher price, lower yield. The market's reacting dovish right now, and it would make sense because we're going to go over the headlines, but you got to consider if the Fed thinks that inflation is going up, growth is slowing, unemployment is rising, maybe it's time to cut, being the logic. We have higher price, we have your lower yield, you have the 10-year back at 4.25% right now. You're up by, 9 ticks, but boy, you have higher price, lower yield. That's the 10-year. You jump over to the 2-year right now. Higher price, lower yield as well, and we have the 2-year. That is a mammoth move for the 2-year, going up 8 ticks, and the 2-year right now down 7 basis points. Here's a yield curve, just giving you where we are, and yeah, on that 2-year, the biggest move out there. The 2 years, it would make sense. Where's the Fed going? That's going to give a good indication of where your 2-year yield is going to be. The 2-year down 7 basis points. We're under 4, 3.97%. The yield on the 2-year. All right, let's jump to some of the headlines. You know what? Before we do, we got to get to the dollar and we got to get to gold. The dollar. Yeah, that is a move, man. And what is going to happen? So what do you have? You have yields dropping. You have dollar weakness. You have market strength. And we'll see if this takes hold, man, because, hey, what do they say? Don't fight the Fed, right? Now, what is the Fed telling you? The Fed's telling you this is what we think is going to happen. Really not that great, their prognosis. They do keep rates where they are. But as I said, maybe a little bit dovish. Seems like they're ready to act considering what they predict is going to happen in this economy. So we have lower yields, and that's weakening the dollar right now. We're at 103.41. That's a 5-minute. You put the dollar on a daily, it's a critical level. Right back to where we were in October. You make a low on that dollar on November 5th. We're right back to chopping around there basically since March 7th. We've been down there for 12 days. Dollar might have a potential to break lower if this is the trend, and this may be the trend when you consider the numbers. And we jump over to gold. How about it, right? Gold, having a moment, man. You got to love it. And it is remarkable that gold sustained such strong prices when we had all of that dollar strengthening, right? The whole run we had in the dollar. Folks, the dollar was at 100 almost in late September, and the dollar traded all the way up to 110. Gold sustained, and now as the dollar has weakened, gold's really caught that second win. There's your daily up to 3,061, and there's your acceleration. Gold up another $20, $25 almost. Look at that run, man. Yeah, up another 20, 25 bucks on that, man. 3,060. Gold may be running at 33.50, man. Gold, check this out. You take a look at the daily on gold. The run starts. I'll put it on a weekly to encompass the whole thing. You're looking at a possible 1-to-1, A to B, C to D. You know, all it is replicating the move you did originally. You trade from 2,000 up to about 2,800. You get a little bit of a break, and then if we do it again, you're trading up to 33.50 right there, a 1-to-1 move. And nothing saying that can't happen if this is what's going to ensue in terms of if we have a dovish Fed, if we have yields dropping now, and a weakening dollar, that's a nice recipe for gold. right now. All right, let's look at some of these numbers. The headline, they hold the rates where they are. That rate, 4.25% to 4.5%. That's the target range where the Fed is right now. They come out with a dot plot. They're looking at about 50 basis points of cuts coming down the line expected this year. Now, here's the meat that I like in here, okay? You get fresh economic forecasts. They raise the median estimate for so-called core inflation. That's going to strip out food and energy to 2.8% from 2.5%. What happened to getting down to 2%? Okay? Yeah. And at the same time, their outlook for 2025 economic growth down to 1.7 from 2.1. So their inflation target up 0.3%. Their growth target down 0.4%. And their unemployment target now at 4.4 from earlier. They saw 4.3 in December. You combine those, and then the last one, they are going to shrink the balance sheet at a slower pace until the debt ceiling deal is reached. I don't see a lot of strength in those numbers, but here's what the market sees. The market sees, hey, guess what? Fed doesn't see a lot of strength right now. Maybe we're going to get some cuts coming down the line. We will find out. Some talk of tariffs in there, of course. Very difficult, the chairman. I was listening to him talk in the press conference right before the program. We were airing that live right here on TFNN, as we always do. And yeah, interesting to see him taking basically the stance, and you got to understand it, because he says, it's really hard to figure out when you're talking about prices, you're talking about inflation. Is that market or is that tariffs? What is the contribution level? Very difficult to shoot from the hip on that one when you're looking at inflation going up, growth going down, unemployment rising, and the market rejoicing. But the market rejoicing right now that bad news is good news. And is that going to be the trend again? Right? Bad news is good news. We got bad news. Higher inflation, lower growth, higher unemployment is not good news. It is good news if it's going to allow the Fed, right, to go back to the dovish stance that they plan on taking. And remember, that got recalibrated for a bit because inflation has always been present, and they got a lot of work to do. But we got markets in positive territory, and we got a treat coming up. We got our man Elliot Wallenbach from Direction, Senior Vice President with Direction. We're going to talk some ETFs over there. We're going to talk some China. We're going to talk some gold, folks, as well as some other equities, NVIDIA in there as well. Stay tuned. We're coming back with Elliot. Don't go away.